Okay, in today's lesson, I want to tell you about why and how you could have entered probably one of the most viable trades this week. Now, this week, the price action for Bitcoin wasn't very promising, in my opinion. In my opinion, Bitcoin had kind of a slow week. And what I mean by that is, look at all of that. That's kind of what we had this week. But nonetheless, we still had some levels we were looking at, and we had some levels that we thought were going to work quite well. So let's analyze that. Let's see the trades. We did have a very nice trade we could have entered, and I hope you guys entered that one as well. But let's just analyze how we would have gone about that. So first things first. So the post we were looking at was the following. We said, when was this? 3 days ago. So 3 days ago, this was the current price action. This is what Bitcoin had done. He had flipped structure internally, and we were looking for maybe a retracement for another continuation up. However, Bitcoin started to stall here for a bit as it narrowed down into this demand zone. This demand zone wasn't just an ordinary demand zone. This demand zone was a zone that was also confluent with our POC, our range POC, as well as our upper POC, as we can see here. Now, this zone, we did have tap one, tap two, all right, and tap three. And tap three didn't quite give us a reaction. Usually, that third tap is where we get that nice reaction after the displacement has taken place. So after we've had that secondary tap, we then have that tertiary tap. Usually, that's where we get that nice, Wyckoff, move off of that play. However, we did get a move, but it was short lived. We had a very nice short from up there, and then price rallied back down, and we said, right, as presently constructed, we will not be looking to enter a trade until price comes to this exact level. Okay, why was this a key level? This is a key level because A, it was a liquidity point. B, it was a fulfillment of still this zone. Perhaps we had some unfilled orders here. Okay, but we said this was the last bit of support until price came back down for this low. And lo and behold, that support held. All right, so we were saying that, hey, listen, we will not be entering this trade until we get confirmation on the 10-minute plus or above on market structure as per usual. Now, whichever indicator you use, whichever confirmation you use, feel free to use that. But that was the key zone we're watching out for. So let's see how that played out. That played out beautifully. So what did price do? So price came back down, created another lower high. All right. Now also created not just a lower high, it kind of created a lower high that looks like a one tap, two tap model at the top. So some people might look at that as a double top bear flag, kind of a distorted double top. All right. And then it came back into our zone. As soon as it touched our zone, we got a juicy reaction up, nice move up, the retracement down, and then a nice continuation play up. Now, even though this is just a tiny move, to the eye, this is a 5x trade. Um, and let's say you took your profit out there, this would probably be a 6x trade. So what that means is that off of this trade, you have fulfilled your expectancy of times 6 of your account. So if you put, 1% in, you've made about 6%. If you put 2% in, you've just made 12%. In a similar fashion, if you've put, 10 grand in, you've just made 60 grand out of that trade. Very nice move, very aggressive move down into our zone, very aggressive move down out of our zone. Now, assuming you just put a limit order on that trade, you may have been okay. You may have been stopped out there, but you may have been okay. But we're going to talk about the confirmation and see how we entered that trade regardless. But if you did enter that one, congratulations. So just a deeper dive into that trade now. Let's see exactly what transpired. So we're going to press the rewind button and we're going to go back to exactly when that trade occurred. So I believe it was around here. We're going to drop down to say the 10-minute because the 10-minute is what we were looking out for. And we're also going to say, right, this is our zone we're looking out for. We're watching price action as it comes into our zone. And price action at the moment is printed a lower low. All right, so we're waiting. We're seeing what price is doing. Let's increase the speed of this to get about 5. We're seeing what 5 is too slow. Let's get 10. We're waiting. We're seeing what price is doing. Bang, price dips into our zone. Now, the way price dips into the zone here is kind of annoying. The reason it's annoying is because price has left this supply zone up here, which can easily be a resistance point. But not just that, it's also ruined our risk to reward, because then your last lower high is all the way up here, at least on the 10-minute. Okay, so we would need to see that level reclaimed before we can justify long. Did that level get reclaimed? So we wait, bang, it did get reclaimed. Okay, now as that level gets reclaimed, what we expect now is a retracement. Unfortunately, this was a trickier one to play. The reason this was trickier to play is because not only did we get, that move up, all right, we did get a flip of structure again. So if on the 10-minute, we did get another bearish flip. Now that is allowed to happen. You can get a bearish flip because that's how price facilitates that retracement in order to come to a zone where it can react from. But usually we would like not to see that flip. That's why in this situation, I would usually go up to the higher time frame, let's say the 30-minute, and let's see if we can get a clean. Okay, brilliant. So in a 1 hour, you could have played this quite nicely, because in a 1 hour, yes, we got that move in. Yes, we got that breakout. And then we did not get a flip on a 1 hour until, we came back into a zone for that move up. So what you would have done there is you'd have looked to catch the retracement up here. Now you could catch that retracement using a fib retracement tool if you want, taking a fib pull from the low to the high. So if we just put our fib tool there, you can see that as a nice, juicy golden ratio and play you could have entered there. And then you could have entered that and simply carried that all the way up. Now, let's kind of see if you were really patient and you waited for an entry, let's say in the midway there, and you put your stop loss around here. Now that trade would have netted you about 2.7x. Okay, so again, nothing to write home about, not a crazy profitable trade, but still a trade nonetheless. As I said, Bitcoin's been a bit slow this week, but it is what it is. You just have to play it as it comes. The more trades will be coming as you go along. Now, Bitcoin is giving us this nice rounded shape, as we can see here, all right, which is making me think, it's building all this liquidity, all right, to potentially move up. And I think if we do get a move, perhaps tomorrow, I think it will be a very, very big move. Very nice rounded bottom we can see here. And whenever Bitcoin does this, it does like to give us a sharp move. Now, if you're in that trade, great. Now, if you're in that trade, you should have de-risked it. What I mean by that is, if you're in that trade, as soon as we got, so if we think about our break of structures now, as soon as we had, lower high, lower low, a flip in structure, a retracement, another flip in structure. So we had a first flip here, a second flip here. Why is your stop loss still down here? Your stop loss needs to be down here now. So you need to have de-risked that trade, move it up here, all right? So that in the case that if price does retrace, retrace from here for another pull up, yeah, you're fine. But if price comes to flip structure here, then yeah, you're rightfully out of that trade, as you should. Okay, so that's how you want to play this as you go. Now the question is, yeah, we've got into that trade, we're still holding that trade. Where is the next trade coming from? Where is the next paycheck coming from? Now, quite clearly, we're going to be watching this range high to see whether we can get a nice deviation play from that range high. So trade number one's coming from there. We're going to get rid of this now because it's done. It's done and dusted. All right. We've broken structure. It's done. On to the next trade. Okay, so we're going to be looking for trade number one from up there. Okay, and we're also going to be watching that external high. So this high here, for another trade as well. So that high is going to be another level we're watching for a trade. Now, if you are looking to catch the chain up until you get to those levels, well, that is a feasible thing to do. And not only is that a feasible thing to do, it's a probable thing to do. So what we mean by that is, yes, we've had that flipping structure that occurred here. Sorry, trading views have been annoying with my cursor. So we've had second break of structure up there. So we could be getting in for a retracement for another move up. And then if we close above that level, yes, we could be in for another move up. All right, so the question is, why not look to get into a trade, first of all, here? Okay, if we can get a nice zone there. Failing that, why not look to get into a trade here if you get a nice risk to reward and a nice zone in there? Okay, the moment we start getting close to this level, we're going to be, a little bit more hesitant and risk averse. Why? Because that means if we are in our range, considering this as a range. We are in the premium of our range, even though it's an internal range. I would want to see price close above this level decisively before I look to enter this trade. Okay, so definitely look out for continuation play number one, continuation play number two. These are your bullish options as you go towards that decisional point here that we're watching. Now, in the case that price decides, you know what, I'm not going up, I'm going to flip market structure bearish here and I'm going to come back down. But in that case, I'm going to be watching this level again for another trade, which would mean we'll have a one tap, a two tap, a three tap, and perhaps a four tap. Now, usually four taps don't tend to happen in Bitcoin based on my back testing. But when they do, they seem to be quite bearish. So we could get that fourth tap just to make a tiny little bit of a lower high before we come back down for this level here. All right, so that's what we're watching out for. We do realize that, hey, on an external time frame, we're in this massive range. We've been in this range for quite some time, not just a tiny bit of time. We've been in this range for now about 2 months. We've been in this range for 2 months, and this is starting to look like. Well, it's not fully yet, but it's starting to resemble this mammoth of a range that we had, for about 245 days, between March, between March all the way up to November. Right, so if we were putting things in perspective, we're just about there now. Okay, considering what we've got here, all of this price action we've got here. If we were to put that in blue, okay, that's just similar to what we have here. Just to put that in perspective, so price can decide to carry on ranging if it wants to, but if it's ready to move, it will move. And regardless, we're going to be looking to capitalize based off of what price is doing. Is this the end of the bull run? Is this the end of the cycle? We don't know. We don't care. But we're making money on the way up, and we're making money on the way down. All right. Now, just to give you some global perspective of what could potentially be happening as well, is we could have a 3-tap model at the top where you've got tap number 1, tap number 2, and this could all be playing out for a potential nice tap number 3. If that's the case, that's why we're ready. We're waiting for a nice short from there. Okay. And of course, we're watching each and every one of these liquidity points to see if we can get a reaction off of those points. But when the time comes, we will talk about that. So don't be alarmed. Now, if you want to stay up to date with what's going on with Bitcoin, if you want to stay up to date with the levels I'm looking at, and you want to get involved with some of these trades, it's easy trades. Don't forget to hit me up on Discord. Now, that is in the signature, so feel free to follow that. And also check out the website if you're looking for any one-to-one sessions. All right, so all of the stuff we discuss here, all of the ways I look at the structure, all of the ways I set up these trades, this we go over in the course. And if you're looking to get access to the course, feel free to hit me up. Anyways, I hope you lot have a great weekend. Be careful. Weekend is a time that is, usually associated with low volume. It's usually quite quiet. Occasionally we get that nice Sunday move, but just be careful not to enter any silly trades. Be careful not to waste your money here. When you've not got nice high predictive probability setups. It's worth waiting perhaps for the Monday, perhaps for the Tuesday, before you look to capitalize. All right. Anyways, we'll leave it there, and I'll see you next time.